All right, folks, good morning. Good morning and welcome back. My name is David Lincoln. I was away for a week, so that's why you didn't hear from me last week, but I am back now. I actually was doing a catering thing all week. We had some Hollywood writers in from out of town, and interesting experience with the whole how do you orchestrate safely the social distancing and all that fun stuff. Anyways, let's get right to it. I want to talk about we're coming up on the election. Expiration for futures is this week for October, and we have to talk about what's going to happen going forward. Now, remember, last month we had an expiration where the curve of the term structure was shaped in a certain way, and then it kind of switched as soon as expiration came on. And I was very intent on discussing this over a period of time and sort of predicting how things were going to switch. So let's pull up our screen again and talk about what's going to happen this month, because I think it's going to be a little different as we do come into the election. I also let's talk about what's going to happen. You know, we can never predict exactly what's going to happen in the market. This time is no different, but what sort of educated guesses can we make about this election and volatility? All right, so the first thing would just be, I think, it seems like sort of common knowledge that we should get a volatility crush right after the election. Now, you know, often I am in direct opposition to what the common knowledge would be. However, this seems to make sense, right? That vol should come in a little bit after the election's over, because you've added certainty to the marketplace. We've been in a high volatility level for some time now. I started trading the VIX in 2016, and since then, we have moved up quite a bit. Back in 2017 was the lowest year on record for volatility, and the VIX took out the all-time low. Remember, the VIX only goes back to the 90s, so there's not a super amount of data. People can extrapolate back further, but as far as since the VIX started, and also the formula's changed a little bit over the years, but in general terms, we reached a low in volatility in 2017 of a VIX of 8 and change. I think it was like 8.57, something like that. Since then, we've had many periods where the VIX was just hanging around 10 or 12, and it seemed that if we got a pop to 14, that was extraordinary. Now, since the onset of the whole COVID thing, we have been in a different range, right? We got all the way up to like the 80s, right, at the beginning of the crisis, and we've come down from there, but we really haven't been able to dip below a 20 VIX. In fact, in the last couple months, we've stayed in a certain range, and let's take actually a look at the VIX chart as I talk about this. But it seems you know, if you had to make a bet that things would go lower right after the election, and let's just back up and take a look at a 3-year chart for the VIX here. So if I get out of the way, here's a 3-year chart, and you can see what I was talking about. So this goes back to 2018, but you can see here's that low, 2017, 8.56. I was off by a penny. And then we see this range where like the bottom, you know, the base is like around a 12, right? 1185, whatnot, for a long period. That's like a 2-year period, right? And then like if you get a pop to 20, it's probably a sale, right? If you get a pop to 25, it's probably a sale. But now we've entered a new range, and as Stephen Aniston and others are quick to point out, we've seen this before in the VIX in the 2000s, where it stayed in a higher range for a while. So there's no real sure thing that this is just that it has to break lower back below 20 right after the election. So there's that. The second thing is that I wanted to bring up, and let me see if I can get my screens going here. All right, if we go back to the chart of the VIX central chart here, the VIX term structure, you can see the front month that's about to expire is almost the same price as it is actually the same price as spot right now, and then the second month is higher, and then you see us in a backwardation shape where the front month is higher than the second month. So on Wednesday, this October future disappears, and UVXY and VXX right now are made almost entirely up of the November future. So the November future is these products right now. And you can see this November future is significantly higher than the December one. And I expect that this could stay this way. And the reason for that is we have this big election event. So while we say that the VIX term structure is not predictive, in a sense, to explain this, the shape, what this is saying is that based on the markets people are making in these futures, things will be lower after the election, right? So in a sense, when we look at the chart now, it is sort of predicting that things will be lower after the election, right? Or at least the probabilities line up that way. So, and this chart looks very similar to this last month at this time. Remember, with October being way higher than November, but we watched that October line curve down below November in the first week after expiration and slowly go into contango. And we were building in contango for a while, but it's kind of settled around this 4 or 5% range back and forth. Dasbov and I were, communicating over the email of the Twitter DMs about, we got to 8%, and we're back to 7%, and we're get to 8% back and forth. But regardless, the shape rearranged itself into contango pretty quickly after expiration. Now the question is, will the November-December relationship go into contango? And I don't think that's as sure this time. We may stay in backwardation for a little while. And remember, backwardation means that we're kind of losing ground. Futures are being pulled up. So the price that VXX or UVXY translates into based on the futures is getting pulled a little higher over time when we're in backwardation, as opposed to getting pulled a little lower. So although backwardation will not have that much of effect, if it stays at like less than 5%, let's say, it will not have that much of an effect over the time period till we get to the election. Remember, the election is less than 3 weeks out right now. So it will be a short-term thing. What I would focus on would be less the shape of the curve and more your anticipation of what will happen after the election and vol, which we don't know. So my overall message, and I was thinking a lot about this over the weekend, but my overall message and recommendation for traders would be to keep your size relatively small coming into this election. And I know that's frustrating to a lot of people, and the last thing you want to do once you've built up some buying power is to not use that buying power to take risk. But at this moment, there's less and less certainty as exactly what's going to happen, and we don't have the advantage of that strong contango pulling stuff lower moving forward, at least for the time being. Now, once the election is over, it is possible that this curve shifts way lower and we go down to like a 20 vol or something and hang there. But that's not for sure. We do know that over time, in the absence of anything, crazy happening, this curve always is going to revert back into contango. And one of the ways you can think of why the curve is in contango all the time is considering the VIX and these products as insurance products, right? So if you think of like, and let me explain it this way. Let's say you have you're like a normal person and you own a bunch of stocks. You want to use the VIX to hedge that position, right? So you say, okay, well, I'm going to buy some UVXY. That way, if the market crashes, I'll make money on my UVXY. and because it will spike, and that will offset some of my losses in the stocks. Now, if UVXY didn't decay and there wasn't some risk of losing money by just holding on to UVXY, then every single person in the world will just buy UVXY, put it in their pocket, and then whether there's a crash now in 6 months or in 6 years, you're not taking any real risk with UVXY because it's just going to stay in the same spot until when and if there's a crash, at which point it spikes and you make money. The reality is when you buy insurance, you pay a premium and you have to pay a little each month to own that insurance. Like car insurance is, I don't know, $100 a month, $200 a month, whatever. Hopefully you haven't been speeding too much with all the money you made trading and your premiums aren't too high. But nobody is going to want to actually sell UVXY to you unless there is some possibility of making money being shorted. So, and what this ends up translating into is a term structure which is in contango. You can also think of it this way. When we look at the term structure to the side of me there, and you think, well, when will there be a spike? Well, it's more likely that within a period of 3 months, there's going to be a spike than within the period of 1 month, right? Because the farther you got in time, the more chance there is for there to be a spike within that time. The longer a period you have to work with, the greater the likelihood that sometime during that period there's going to be some sort of spike. So that's why the curve generally arranges itself moving upward. The fact that we've been in this curve behind me where the futures have arranged themselves downward over time, to me, reflects an anticipation of a lower volatility range sometime after the election. And indeed, if you take the overall average of the VIX, it's somewhere around a 1920. So long term, we expect VIX to revert to that average. And that's why you see the far out futures are lower than where we are now, but they still are higher than the long-term average. So this is some things to think about as we look at the term structure right now. Let's take a look at the chat and see what's going on with you guys. Thanks so much for all of you who have added memberships. It helps out. I know it doesn't sound like a lot, like $1 or something or $5, but it does help out, helps pay the bills, and I appreciate it. I am considering doing some sort of thing where there's a member-only chat, but I haven't decided on that. Hey, what's up, 3756 hands? Dazboff, what's going on? Hey, what's up, Marcella? And Spencer, buddy, what's going on? And Eric Cohen says, I'm thinking the same, but the opposite, that if we do not have a clear outcome, VIX could edge higher. And I think all of these thoughts are legitimate. I think that there is uncertainty moving forward, and a lot of times when the obvious thing is one way, the opposite happens. And right now, of course, the obvious is, well, right after the election, vol's going to come crashing in. That's like if you're a retail guy or gal who's been trading for 6 months and you've been following stuff, the most basic way of looking at things would be vol's going to come in after the election. And in my mind, that is the most likely outcome. However, to listen to the interview that I did with Stephen Aniston recently, or he makes some excellent points and a case for the fact that we could move higher from here or stay the same from here after the election. We've got a whole bunch of stuff to consider. We've got the not only in the U.S. politically with the Supreme Court and the election, but in general terms, there's a lot to consider. We need to have some sort of stimulus. I believe the market has been pricing in that we would get some sort of stimulus done at some point for a long time. So if that doesn't happen, it's going to put pressure on the market. I don't know if you've noticed, but when over time the market tends to move higher just due to the fact that, and the way I like to think of it is, a bunch of people, everybody's going to work, and so many people have 401k or some sort of investment that invests money in the market every week, right? So to have the markets move lower, you have to have something to counteract that continual flow of money into the market. The other thing is that over time, there's more and more people in the world, right? And there's not so many places to invest. The U.S. stock market has done better than many other financial markets. And so we have people from all over the world coming to the U.S. and putting their money in a finite number of stocks and stuff. So stuff continues to move higher, even kind of, it seems like it doesn't make sense that it should move higher, but it always seems to continue to move higher. And so trying to short the market is a tricky business. You can make a lot of money doing it, but it's generally easier to play from the long side. I know people have had a lot of success this year at riding stuff up, and we saw that from right at the beginning of the crisis when all the stimulus and money started getting pumped into the markets. People have had a great ride to the upside. A theme I had in the show over the last month or two was, okay, we've had this big move to the upside. Be careful now about buying every dip, because for a while in May, June, July, every time stuff went down, within a day or two, it went back up again. And so people were making a fortune around the time when Apple split, Tesla split. People were making a fortune by just getting long these two strong contenders, and every time they went down, people would buy the dip, and they made a ton of money. The market shifts gears over time, and we have short memories. It's just human nature. You get into a routine, and you think it's always going to be that way. And being able to shift gears is very difficult. Some people are better at it than others. For me, it can be a struggle shifting gears. And the other thing I wanted to just caution you about, which I really messed up last election, is to try to play the election based on who you think will win and what the implications are on the economy of that. People love to be in their tribes, whether it be Democrats or Republicans, and they love to repeat and agree on stuff amongst themselves about this or that's going to happen. Try to avoid that with trading, because it's more complex than just that. It's very hard to predict what the market's going to do, and the common knowledge doesn't always work. What I did, which really, really messed up, was I wasn't in favor of either candidate, but I wasn't in favor of Trump when he got elected, and so I took money out of the market, and I ended up missing out on a huge rally, which my dad reminds me of constantly, because I was applying politics to the market. Don't make the mistake I made, and try to separate yourself from that if you at all can. There's not a clear reasoning, in my opinion, to say, oh, X or Y party, if they win, the market's going to do X, Y, or Z. And so try to get away from that if you can. It's only going to hurt you in the long term. Anyway, so I'm going to be back all week. I'm working on a bunch of projects to do with the channel, and I'm revitalized to bring you the best content possible. I will be continuing my next chapter of my journey as a trader in Chicago, and that should be exciting. I am going to kind of gloss over a little bit of the details, just because there are real people involved here, and I don't need, as much as I'm willing to tell my story and the nitty-gritty of it, I don't have it's not my right to tell other people's stories. So I'm going to gloss over a little bit of stuff, because I want to maintain people's privacy. People have gotten married and have kids and stuff, and airing their dirty laundry is not necessary, but it still should be juicy enough to have some fun with that story as we move forward. So the main theme I want you to take away from this is keep it small going forward. I'm going to be cutting back my position. The bullseye position, which I've had on, has been okay. last week. I rolled it out to this next week. So currently my position in UVXY is I am naked short 5 of the 16 calls, and so that's a little bit scary. If we have some big spike, it will hurt me a little bit. But this position has been working out over time. We did have a spike last week in UVXY where we got up to 1780, something like that. Let's just pull that up for a second here. And that spooked me a little bit, especially because I couldn't watch my positions. Remember, with trading, you want to manage your position based on when you can be there, and when you can't be around, you might want to make a smaller position. So if you look at this chart here on Thursday, we spiked up to here, right? And I got nervous. So I covered like 2 of the calls out of the 5 I was short. And of course, as soon as I covered those, we went right back down again. So, and the reason I covered them is because I was trading too big for my account size. I should have only been short maybe 3 calls instead of 5, and because I was short more, I didn't have that room to the upside to manage a spike. So I got too big. So learn from my mistakes, keep it smaller. I know you want to make money, but getting discipline and working things the right way is ultimately going to make you more money. We'll see what happens from here, but we were used to UVXY being like above 20 and in this holding pattern for a while where it was like between 20, 22. Now it's moved down to 16 area. It sounds very cheap, but you can't think of it as like you think about stocks, because this is based on rolling 2 futures to a rolling average of 2 futures. So comparing a 16 this month with 20 last month is a little bit apple and oranges. Because it's based on, last month futures is expired and it's gone. It's out of here. However, when we do have a kind of a big down move like this, it takes a while for the forces of contango and whatnot to decay this further. And like I said, there is going to be possibly no contango for a while. At best, there's a flat bias right now, and you're not going to be able to rely on contango to pull this lower for some time forward. In fact, the bias will be pulling this upward as we move into backwardation later in the week. Let's take one last look at the VIX Central so we can nail this point home before I come off the air here. But if we look at the term structure here, this future is going to expire on Wednesday morning. And we will be in backwardation. And what that means is that there's no bias to pulling this lower. Of course, if you're long a TVIX and a UVXY, there is a little bit of pressure just from the leveraging and rebalancing. However, there's basically no bias. So at this point, you could just consider this based on the futures, and futures are pretty close to spot, and there's no huge drag. So if you want to be long volatility, this will be a good period to where you could be long a little UVXY, and it's not going to cost you a lot day to day. And so good news for the longs. For us long-term shorts, it's not going to be very profitable over the next month or so, unless we do get that big crush on the election. However, that's not a given at all. So there you go. I haven't given you too many answers or too many clues about how to make money this month, but hopefully you understand the situation slightly better. All right. That's all for today. I hope to come on a lot this week and make up for being gone last week. I do want to get on a more regular schedule. I know some members have talked to me about it being frustrating not knowing when I'm going to come on. So I want to try to get back into a regular schedule and publish that for you. The problem is that my work schedule outside of YouTube is all over the place. That's why I haven't been able to be on a regular schedule. However, I'm going to work on that. Thank you so much for your support, for Patreon support and other member support. It's much appreciated, and I will see you next time on the Short Vol Show live. Thanks for watching.
You're watching Famous Days.